Good morning. Welcome to 59th episode of AAA weekly webinar series. Today, we are conducting part 2 of interplay between income tax, GST, and insolvency and bankruptcy law. There have been various judgments in the past, and the impact of rainbow paper is also significant as of now, till the time any amendment is done by the lawmakers, government. But yes, last part 1, we dealt with the subject. However, we could not complete it. There are many more judgments that we wanted to share with you. Therefore, this part 2. But however, we actually would be focusing on the responsibilities, obligations of the resolution professionals or liquidators as regards income tax and GST is concerned. Also looking into the GST law and other law. Like yesterday, we were also studying whether this state tax officer versus rainbow paper, is that applicable to Central Sales Tax Act, because some of the cases we have received demand from Central Sales Tax and huge demands are being raised. And then when we went to Central Sales Tax law, the Central Sales Tax Act, see, if you recall, there used to be a trade tax and then there used to be a central sales tax. Now, the central sales tax, we couldn't find any section which is parallel to Section 48 of Gujarat VAT, which was used by the Honorable Supreme Court in rainbow paper. Yes, let me share my screen. So, friends, just focusing on what the income tax and GST ask us to do, treatment of income tax and GST dues prior to CIRP with case laws. This is the first subject that we are going to deal with. Primary focus would be on various judgments, judicial pronouncements, may it be from any kind of forum, maybe high courts or maybe even NCLT or NCLAT or Supreme Court. So when we say this, the one that is very clear that it is an operational creditor. All these statutory authorities, the GST and income tax is an operational creditor. It's an operational debt, and the claim has to be filed by the statutory authority in Form B as an operational debt. And as far as the rights of the operational creditors are concerned, they are supposed to attend the meetings in case the total aggregate of their dues are 10%. And the government authorities also will file their claims during liquidation process. And in the liquidation process now, the stakeholders consultation committee will also have their vote, will also have their representation in the stakeholders consultation committee. Now, they are supposed to file their claims, and while verifying their claim of statutory authorities, we should ask for the assessment orders and also if the recovery certificate is issued. However, in case the recovery certificate is not issued and only assessment orders are found, then we can also ask us the status of any appeals filed by the assessee in this regard. So the claim can still be accepted with some deficiencies which actually can be informed to the government authorities. So when we say this on operational creditor, there are many judgments that we can see on operational creditors. The statutory dues, income tax dues, GST dues are operational creditors. Like the judgment in the case of Principal Director General of Income Tax, Synergies Dure Automotive Limited. In this case, it is very clearly said that the income tax department of the central government and the sales tax department of the state government and local authority who are entitled for dues arising out of the existing law are operational creditors within the meaning of Section 5, subsection 20. In Kiran Global Chem Limited, but this was the appellate authority NCLAT judgment where it was held that the tax department would fall under the category of operational creditor. Similarly, the Andhra Pradesh High Court in Leo Edibles and Fats Limited said that the income tax department triggered controversy by insisting on having priority in the collection of past tax dues from companies going through a resolution mechanism under the IBC held that the department cannot claim any such priority. Then in the case of Akshay Jhunjhunwala versus Union of India, Kolkata High Court, the term operational debt would also include a claim of statutory authority on account of money receivable pursuant to an imposition of a law. Principal Commissioner of Income Tax versus Monet Ispat and Energy, where it was very clearly held, that the moratorium under IBC will apply to the order of the Income Tax Appellate Tribunal. The Apex Court made it clear that the income tax dues, being in the nature of crown debt, do not take precedence over secured creditors, even those secured creditors are private persons. Similarly, Electro Steel Limited versus State of Jharkhand, the Jharkhand High Court has said it was held that the resolution plan cannot be said to be binding on the commercial tax department on Jharkhand, as they were not participating into the resolution process. And however, this judgment is not sustaining because of many other judgments which has actually come almost against it. Sales Tax Department, State of Maharashtra versus New Falton Sugar Works Limited. It is again an NCLAT judgment. The appellant is an operational creditor. Provisions of Maharashtra VAT 2002, creating first charge in its favor, get eclipsed under the overriding effect of provisions of Insolvency and Bankruptcy Code. COC approved resolution plan is beyond the pale of challenge before the adjudicating authority, even before this appellate tribunal. Similar issue, that was the Maharashtra VAT, and the other issue was the Gujarat VAT when it came before the Honorable Supreme Court in the case of Rainbow Paper, State Tax Officer versus Rainbow Paper. It was held by Honorable Supreme Court that the GVAT Act has a section 48 which says that any dealer, assets of the dealer, the department would have a first charge on the assets of the dealer against the dues of state tax. So that was this particular judgment, it was regarding Maharashtra VAT. However, this is much before the Rainbow Paper Mill. Then we presently would be having Rainbow Paper as a guide to us till the time there is any amendment made in the law by government. Ultratech Nathdwara Cement Limited versus Union of India. This was a Rajasthan High Court judgment where the demand notices were quashed. Any demand notices issued, any other demand which they may contemplate from the period prior to the resolution plan being finalized, the demand notices are ex facie, illegal, arbitrary, and per se, and cannot be sustained. Now, going to the various judgments on the moratorium. What is the kind of moratorium under Section 14 of the Income Tax? And as far as the GST and income tax authorities are concerned, what kind of moratorium it would be? Whether the moratorium is on the assessment process, whether the moratorium is on the filing of proceedings, whether the moratorium is on recovery of dues. So we'll see with many judgments which talks about what is the meaning of moratorium with regard to income tax and GST authorities. Now, when we see this Section 14, which is Section 14 says during CIRP, the start of fresh proceedings is prohibited against the corporate debtor. We'll just discuss what are the proceedings. Continuation of pending proceedings is prohibited against the corporate debtor. Even the continuation and the start, both are prohibited under Section 14 during CIRP, during moratorium. Execution of any judgment or order is prohibited during CIRP. Any action to recover any dues is prohibited. Any action to recover any dues is not a problem at all. Execution of any judgment may be any judgment where the demand is to be recovered or any other kind of assets of the company are to be attached. All those would be under moratorium. Now, we only have to see what are proceedings, what are the fresh proceedings, what is the pending proceedings. Let's see what the various judgments says. Now, in this Income Tax Appellate Tribunal, in the case of Shamkin Multifab Limited versus Deputy Commissioner of Income Tax, this was a Delhi tribunal case. It was held by Income Tax Appellate Tribunal, where an application filed under Section 7 of the IBC has been admitted and moratorium under Section 14 of the IBC has been declared. Hence, an appeal filed by the income tax authorities against the assessee company under the provisions of Income Tax Act could not be allowed to be continued during the course of moratorium period. Now, that means that the assessment was completed. Then the Commissioner of Appeal provided some relief to the assessee, to Shamkin Multifab Limited. Then the Income Tax Department filed an appeal before Income Tax Appellate Tribunal. So the Appellate Tribunal said these are the proceedings which is being continued during moratorium. So it would not be continued during moratorium. So it was not allowed to be continued, and probably it was quashed. So the appeal was filed by the Income Tax Department in this case. So I think it is very important to see that the appeal was filed by the Income Tax Department against any relief which was provided by the Commissioner of Income Tax Appeals. Now, again, in the case of Alchemist Asset Reconstruction Company versus Hotel Godawan Private Limited, the Income Tax Appellate Tribunal of Delhi, this is based on the Alchemist Asset Reconstruction, the Supreme Court judgment, where the Honorable Supreme Court have held that even arbitration proceedings cannot be initiated after imposition of moratorium under Section 14. So, appeal filed by the Income Tax Department was not allowed. Any arbitration proceedings cannot be initiated during CIRP. This was basically the Section 14. Now, the Deputy Commissioner of Income Tax versus Bhuvan Madan, RP of Diamond Power. This was NCLT Ahmedabad decision. In this case, the application was filed to seek permission from the adjudicating authority to carry out the assessment proceedings under Section 153A, read with 281B of the Income Tax Act. Considering the necessity of the assessment of tax, the prayer of the applicant is accepted to the extent of only doing the assessment. Now, in this case, the assessment was supposed to be completed by the Income Tax Department. It may be a case of a survey, or it may be a case of search. And those assessments were basically for 6 years. And it was also made clear that the Income Tax Department cannot proceed and file a case against the company without prior permission of this adjudicating authority. And it was also made very clear that the resolution professional will cooperate with the Income Tax Department. However, it was also directed to the Income Tax Department that they will not make the work of the resolution professional. They will not create problems in the work of the resolution professional. So this is a case where the Section 153 capital A proceedings were in fact permitted by the adjudicating authority. However, no recovery was allowed. Any further proceedings in the adjudicating authority said that the permission would be required from adjudicating authority. So this is the kind of moratorium that we are talking about. Now, my understanding is, let us understand what is the assessment process. Assessment process is only to see what kind of tax is payable by the assessee. And in case any appeal is filed by the assessee against the assessment order, it is the duty of the RP to attend to that and to see if there is any relief which can be given to the assessee. Now, in such cases, let us understand what we are supposed to do. Assessment process, we should cooperate with the Income Tax Department. See, but then in some cases where the RP feels after the receipt of claim, after the assessment is made on the value of the assets or the kind of liquidation value of the asset, and the RP can also always write to the Income Tax Department that I have already received claims of say 1,000 crores, and the assets in the company under to the is not to the extent of the claims of the secured creditors. Therefore, therefore, like even if the assessment is completed, the dues would not be recoverable because the dues are operational debt. However, after the rainbow paper, the scenario has changed. Now the income tax department can always say, or even the state tax department can always say, I see, like when I'm talking about the rainbow paper, it should be very clearly noted that the rainbow paper is applicable only to income tax and state tax, like the Maharashtra VAT or Gujarat VAT or any other state tax. When we talk about the, see, if you would recall, there are two tax. There used to be, one was the VAT of each state and the other was central sales tax. And in that central sales tax, there is no such provision of automatic, there is no such provision of automatic charge on the assets of the assessee. So in case there is a demand from central sales tax under the Central Sales Tax Act, we could not find any section like 48, section 48 of GVAT or similar sections in the other state VAT scenarios. So what I'm trying to say is that it is not really applicable to Central Sales Tax Act. Rainbow paper is not applicable because there is no provision in that law regarding the automatic first charge on the assets of the dealer or the assets of the assessee. Now coming to the GST, there is a specific provision in GST. I will come to that. In that provision, in GST also there is a provision that against the GST dues there would be lien on the, there will be charge on the assets of the dealer. However, there is an exception in GST law itself that in case of insolvency, then there will not be any charge on the assets. Similarly, under the Customs Act also, there is an exception. There is an exception that there is no charge on the assets as against custom duty in case it is a clash between IBC, SURFACE, or Recovery of Debt and Bankruptcy Act. So these are the three exceptions given in the Customs Act also. So therefore, presently, whatever we are talking about, all the statutory authorities are not to be equated with the judgment of rainbow paper. GST is not eligible, Central Sales Tax is not eligible, Custom is not eligible, and we have to see this excise and the service tax. But probably there would be, we'll check and we'll come back to you. But then so far we have checked these laws and the rainbow paper is not applicable on these. Now, as far as this during CIRP, what are the obligations regarding compliances of taxes? The resolution professionals are supposed to comply with all the provisions of TDS and TCS during CIRP. Means any kind of application of TDS or TCS has to be complied with. All TDS, TCS returns are supposed to be filed. Now, this is what I was talking to. Section 82 of CGST Act. CGST Act came in 2017. Insolvency law came in 2016, November. So it is very clearly provided here, save as otherwise provided in Insolvency and Bankruptcy Code 2016. So the GST Act provided an exception that the charge on the property would be there. However, exception is those whatever is provided in IBC would be prevailing. Similarly, Section 142A of Customs Act, as I was saying, there is an exception given to recovery of debt dues to bank and the Financial Institutions Act. Now, this particular act has been changed to recovery of recovery of debt due to banks and the bankruptcy bankruptcy act. So now it is the RDB act, then SURFACE and then IBC. So there is this was also amended. The Customs Act also was amended. So even if there is a demand of custom duty, that actually would be, there will not be any first charge if the company is under insolvency. Now, in this, let us try to understand. The Supreme Court has actually given regarding the statutory dues in the case of rainbow paper. So what exactly the Supreme Court says? First of all, the operational debts are defined under Section 521. Then operational debt means a claim, that's all very clear. It means a claim in respect of the provisions of goods or services, including employment or the debt. Then such operational debt can, however, be secured if a security interest is created on such debts. Security interest definition is there in Section 2, subsection 31 of the IBC, and it defines as the security interest means a right, title, or interest or a claim to property created in favor of or provided for a secured creditor by a transaction which secures payment or performance of an obligation and includes mortgage, charge, hypothecation, assignment, and encumbrances. So this is what was held in rainbow paper, and the GVAT the GVAT demand of 47 crore was created, and therefore consequently the state government tax dues, they filed their claim. RP ignored that, and finally the Section 48 of the GVAT, it was considered that it actually will have some charge on the assets. So once there is a charge on the assets, the operational creditor will become secured operational creditor. So when it becomes secured operational creditor, so it will actually fall almost pari passu with the other secured creditors. So therefore, the allocation has to be made in the resolution plan for these secured operational creditors also. This was the judgment in the rainbow paper. Although the rainbow paper said the ruling in rainbow paper cannot be regarded as laying the general proposition having application to all government and statutory dues, the position clarified by Supreme Court categorizing government dues protected by charge over assets of the taxpayer as secured debt had anyway. But then this is definitely, so far there has been many judgments by NCLAT, by NCLT benches, where everyone is applying rainbow paper, and resolution plans are being rejected. And even in the case of liquidation, the liquidation proceeds are also supposed to be distributed in this manner, considering the state tax officer and considering the income tax department as secured operational creditors. I'll just take a few questions, and I am not sure, because presently I think my voice reached to everyone. I am just getting a feedback that your voice is low today. I have only got one feedback, so maybe I'm okay. So Manvi Jain is asking, in case tax authority has not filed claim, RP is supposed to check books of account and admit claim suo motu as per rainbow judgment. But does this requirement extend to even classifying the tax department as secured creditor, as charge for tax authority is created under statute and details not available on MCA website? Now, MCA website, definitely this kind of charge would not be registered. This kind of charge would not be registered because this is a charge by application of law in the case of state tax department, in the case of income tax department, because the income tax department is also saying that there is an automatic lien on the assets of the assessee in case of dues. Now, in case no claim is filed, then the resolution professional or liquidator cannot admit a claim without someone filing it. However, the information memorandum that must contain the details of statutory liabilities as appearing in the books of account or as per any litigation or proceedings going on, all that detail must be available and must be provided in the information memorandum, so that anyone submitting a resolution plan should consider information memorandum as the information about the obligations of the company, and that obligation should be attended to in the resolution plans. And in case the resolution plan does not attend to those obligations, then the resolution plan is likely to be rejected or even asked for amendment. So, like what I'm saying is it is not to be classified as a claim. However, this particular information must be given in the information memorandum, because the RP can only admit a claim of worker, which actually can be seen from the books of account. And otherwise, there is no other claim which the RP is supposed to admit as claim. However, the information has to be captured and to be provided to the resolution applicants. Now, there is an email which ID only, which says, can existing arbitration proceedings continue during CIRP, though they cannot be initiated? No, the section 14 is very clear that the continuation of arbitration proceedings would also be stayed during moratorium. So therefore, the existing arbitration proceedings also cannot continue. However, when the liquidation starts, then the proceedings can again recommence. It is only stayed during CIRP. However, in liquidation, all this will be restarted. So then we have Maheshwara Gokada, company not in operation but not filed IT returns of the past years and not cooperating with RP. Section 19(2) hearing is pending. In this scenario, how RP can proceed in CIRP with regard to filing the returns? See, as far as this, the lawmakers, the NCLT, they are expecting that in case the promoters are not cooperating, the RP should make all efforts to bring all assets and liabilities on surface for the purpose of providing information to resolution applicants, so that more and more claims can be attended and more assets can be brought on the surface. Custody and control is taken on all the assets. That's what is expected by the law. In some cases, when the books of accounts were not provided by the promoters, by the suspended management, in that case, even I have seen NCLT is saying that the RP should have made effort to restructure the accounts. In case the RP has the last balance sheet, and that last balance sheet, the auditor of that particular balance sheet definitely would provide information as far as this item-wise ledger of accounts are concerned. In case we have the item-wise ledger of accounts, then we can have the opening balances, and then we can go to the bank and take the bank statements for the period for which the accounts are pending, and based on the bank statements, the accounts can be restructured, of course with a lot of errors, because see, the bank statement can only give what is coming in, what is going out. The nature of transaction is not given in the bank statements. If the suspended management is not cooperating, that means the RP also would not have access to vouchers, invoices, sales invoices, purchase invoices, would not have all the information also. So therefore, it is difficult, but yes, it is expected that the RP will restructure the books of account based on the bank statements, because the RP is also having responsibility of determination and finding avoidance transactions, and avoidance transactions can also be seen from the bank statements to some extent, not to full extent. And the related parties information can be seen from public domains. Any transactions with the related parties based on the bank statements can also be seen. What I am trying to say, it's difficult and it may not be correct, but yes, it is expected from the RP. In case the suspended management is not cooperating, then the RP should try to restructure whatever extent it is possible. Arun Srivastava is saying whether claims filed by the income tax authority for which appeal is pending to be reflected as secured or unsecured operational creditor. As long as the appeal is concerned, appeal is filed by the assessee, but there is an existing demand. Once there is an existing demand, the income tax department has a right to file the claim. In case the income tax department files a claim, then as far as the rainbow paper judgment is concerned, it should be considered as secured operational creditor. It should be considered as secured operational creditor, even if there is no charge in the MCA portal registered, because the statutory authorities do not register charges to the ROC. Now, coming to the next topic, which is duties of IRP, RP under the code during CIRP towards tax authorities. So the first of all shall be responsible for complying with the requirement under any law for the timing in force. Complying with the requirement means all information seeking processes where the tax department will seek information from the company, that has to be complied with to the extent it is available with the RP. That is the compliance of all the laws. All TDS law is applicable, all TCS law is applicable, all kind of GST is applicable during CIRP. So the claim has to be filed for a period prior to commencement of CIRP, during CIRP and during liquidation. If there is any obligation of tax, any obligation of GST, it has to be complied with. However, during liquidation, if there is any income, in liquidation, if there is any income, on that particular income, the tax would be considered under Section 53. If the assessee is having some rental income during the liquidation process, or assessee has earned a capital gain during liquidation process, that would be considered under Section 53 as operational creditor. However, presently the confusion still prevails that in case we sell some asset of the company, and then we see that there is a capital gain tax on that, technically that also should be considered as secured operational creditor. And while the distribution is made, even the tax should be considered as secured operational creditor. So that means the distribution would be along with the secured creditors. So quite a lot of complications that has been created with the interpretation given in the rainbow paper. Like IRP, RP can also have access to books of account, and they can actually seek government authorities also. Some information can be sought from government authorities. RP has to take control and custody of the assets, even if the assets are attached by the income tax department or the attached by GST or customs department. But in the it has to be, RP is supposed to have the control and custody and possession of the assets. So similar powers are also there in the liquidation process. I would simply go a little quickly because all these, but then one thing which is important is as assessment, reassessment notice received post CIRP, and for the period when the CD was under CIRP period. No, RP is responsible for complying with. RP is responsible for complying with the requirements under any law for the time being in force. The proceedings will have to be attended by the liquidator or monitoring agency, and all the information would be provided to the tax authorities. The tax levied for any income during CIRP would be paid by the resolution applicant and would be considered as CIRP cost. No, any income earned during CIRP period, any income earned during CIRP period is taxable. And if there is any tax is payable on that, the RP is supposed to pay tax on that. RP cannot say that during CIRP, when I was conducting the business, income tax is not payable. If while conducting the business during CIRP, if there is any tax due, that actually the amount would be payable. It will be payable as normal operational expenses. So this is very important that income earned during CIRP is taxable and the tax is supposed to be paid. Now, any penalty or other penal charges levied by the income tax authorities would be paid by the resolution professional, as the same would not form part of the CIRP cost. Now, there are penalties of non-compliances, and only for that particular period during CIRP. In case the RP is supposed to file a return and he is not filed the return during CIRP, and the CIRP is continuing for 2 years or 3 years and he's not filed the return, so income tax department can levy a penalty for not filing the return. However, in case the RP can establish that he was prevented by sufficient reason, then that particular penalty can be deleted by the income tax department. But in case that particular penalty is payable, that would not form CIRP cost, as per the circular issued by IBBI, circular number 02 of 2018, which was issued on 3rd of January 2018. The tax can be on account of the default in TDS provisions or TCS provisions, even if there is a default conducted by the RP on TDS or TCS provisions, that also would be paid by the RP individually and not from the CIRP cost. Because see, the penalties for non-compliance of any law, as per the IBBI circular, it will be not be considered as CIRP cost. Now, the refund of pending assessments can be collected by the RP or liquidator if no demand is pending. Income tax department has a right to adjust. Income tax department has a right to adjust any refund against any past demands. Under section 245, they are only supposed to give a notice to the assessee, and after the notice is given, what I understand is when any refund from the income tax department is my asset, and the income tax department cannot recover their past dues from my assets. Therefore, whenever there is a notice which under section 245 income tax department is supposed to give before adjusting any demand from the refund due, immediately it should be objected to by the RPs. The RP must object to this, that this is not permitted, because in case we permit that, means that the income tax department is recovering its past dues from the assets of the company, because my refund with the income tax department is my asset. So income tax department has got no right to recover the tax dues from my asset. So whenever notice under section 245 comes, it should be denied, it should be appealed against. Any tax deposited under protest for which an appeal is pending cannot be claimed after the appeal is decided. However, the same can also be adjusted by the tax authorities. This is the, we can definitely say that it is not really possible to adjust the refund. I have a question from Ranjan Chakrabarti. Is IT dues are secured financial creditors, whether it would be taken if no claim filed or a wrong form used or any other defects? No, in case of any wrong form, we should write back to the claimant that the form is not correct, it should be corrected. In case the claims are filed and it is not admitted, then the RP is supposed to mention this into the information memorandum so that the prospective resolution applicant should consider this. Then all claims of IT department to be considered as secured operational creditor. Yes, as far as this rainbow paper mill says, all claims of income tax department to be considered as secured operational creditors. This has been held by NCLAT also in multiple cases, relying on state tax officer versus rainbow paper private limited. So these are the few questions. And I also have a question from Kanayalal Salawat. Can income tax department issue notices for reopening after successful resolution plan approved by NCLT on the basis that the information for reopening came to the department on account of search seizure of other person? Now, this is a controversial issue because see, once the resolution plan is issued, once the resolution plan is approved and the company is resolved, there are various judgments which says that the notices issued later on would be quashed, considering them as illegal. I will come to those judgments, but the income tax department cannot issue such notices. Now, in liquidation, we also should consider what actually happens in liquidation. In liquidation also, the pending assessment or any other proceedings would be revived, and assessments would be completed based on the information available. Now, in case the liquidation value is too low, but then income tax, now since the income tax department is having a priority as a secured operational creditor, then the RP or the liquidator should fight all income tax cases, should fight all trade taxes, GVAT or MVAT or Punjab VAT. All this has to be fought, providing information to the department, saying that this particular tax is not payable, to protect the interest of the creditors. Only those claims should be admitted which are actually payable by the company. And till the time the claims are crystallized, the RP should continue to file appeals and continue to provide information to the income tax department or to the state tax department so that no unnecessary demands are created and no unnecessary litigation is raised. However, no enforcement can be done by the departments for recovery of their dues, as the liquidator has the power to take control and custody of all the assets of the company. Claim would be filed by the government authorities and that would be considered by the liquidator under Section 53, and the dues of the government authority would be paid as per Section 53. So during liquidation, as I said, that it is important that we should try to crystallize our tax demands, considering that the tax demands are payable as a secured operational creditor. So all the tax demands are supposed to be attended to and all the information is supposed to be provided. As see, we have seen in the part 1 also, Section 178 is not applicable to companies under IBC. Section 46, we saw the capital gain tax in case of distribution of assets to the shareholders. That would be taxed in the hands of shareholders and not in the hands of the company. Now, this was a good judgment in the case of LML Limited versus Office of the Commissioner of Income Tax Mumbai. This was Ahmedabad, NCLT, NCLT Allahabad. NCLT Allahabad was the judgment, and this particular judgment was, it says that in liquidation, in case we try to finalize the capital gain tax, one option is that the capital gain can be considered as liquidation expenditure, and the other is that the capital gain tax can be considered as an operational debt. Now then the judgment went on to discuss that in case we consider this as a liquidation expense, that means that we are violating Section 53, which says that the priority of tax dues is lower than the amount payable to secured creditor. Then the other issue was that now it should be the tax on the capital gain. The capital gain tax should be considered as operational debt. Now, if it is considered as an operational debt and the liquidation value is available for the operational creditor, then it would be allocated accordingly. However, we can't say that the capital gain tax is not applicable on sale of assets during liquidation. The capital gain is applicable. Capital gain tax would be calculated and it would be considered as an operational debt, and distribution would be made under Section 53 of the IBC. So this was the judgment, and then finally it was also held that Section 179 of the income tax provides that in case the tax dues are not recovered from the company, then it can be recovered from the directors of the company under Section 179 of the Income Tax Act. And however, I think when we read this Section 179, which says that where any tax is due from a private company and if the same cannot be recovered, then every person who was a director of the private company at any time during the relevant previous year shall be jointly and severally liable for payment of such tax dues unless he proves that the non-recovery cannot be attributed to any gross neglect, misfeasance, or breach of duty on his part in relation to the affairs of the company. Now, I'm seeing that in case some fraudulent applications are also under Section 66 is pending and some decisions are made. Some decisions are made by the NCLT. Then even the director would not be able to say that the non-recovery cannot be attributed to gross neglect, misfeasance, or breach of duty. So that would be considered as breach of duty. So the amount of tax which is not recovered by the department from the company because of being considered as operational debt can be recovered from the directors of the company. Therefore, it is the duty of the RP to provide information to the tax departments so that unnecessary tax demands are not raised. Similar decision was held in the case of Pooja Bari, the liquidator of G Ispat Private Limited. No, Leo edibles and fat. I think one of the questions which was being asked that the income tax department claimed a charge on the property even after the resolution plan was approved or after the assets were sold. The income tax department was not allowing to get it transferred to the buyer. So therefore, it was held that the income tax department has to give way and get this particular property, allow this to be registered, because the income tax department cannot claim a priority on the tax, because these are all prior to rainbow paper. Now, similarly, Section 89 of CGST Act, it also says that the liability of the directors, as we have seen Section 179, similar sections are also there in the CGST, like in case the amount is not recoverable from the company, then it can be recovered from the directors of the company. So Section 288 of the Income Tax Act, it provides the authority would be provided to RP and the liquidator to appear before the income tax authorities as authorized representative. Otherwise, the law was only permitting the company directors or the employees or a professional who has been engaged for representing before the tax authority. So in this case, even the RP can appear before the tax authorities as authorized representative. Similarly, Section 140 of the Income Tax Act was also amended to provide that the RP can also sign the income tax return. So these are various scenarios. In case we have already discussed capital gain, and we have already discussed some 46 and 238, all that we have. Section 238 of the income tax in fact, provides that the liquidator can claim refund under the Income Tax Act. Yes, the liquidator can claim refund under the Income Tax Act, because although there are judgments from NCLAT, like during the liquidation process, the tax should not be deducted on sale of the properties. However, there are other kind of income where some TDS is deducted, and the liquidator can file return of income and can claim the refund under Section 238 of the Income Tax Act. So we have seen capital gain a lot. We've also discussed Mujabari, TDS, TCS has also been discussed. Liability of the directors has also been discussed. 140 filing of return. Now we also have been, last time we discussed this Section 41 of the Income Tax Act, where the remission and rescission of the liabilities are taxed when the liabilities are ceased to exist. All those liabilities which are appearing in the financial statements against any loss claimed or any expenditure claimed or any trading liability claimed earlier by the company and allowed by the income tax department, later on, in case that liability is not payable, then that particular liability would be considered as profit of the company, and it would be taxed under Section 41, subsection 1 of the Income Tax Act. So this has actually further triggered some discussion when this budget 23, Union Budget 2023 was announced, and some amendment was given in Section 28, subsection 4 of the Income Tax Act. And although we didn't find any difference, but we also started feeling that even any kind of liability which is ceased to exist, like suppose taken a term loan of 100 crores, and after the company is gone into insolvency, and that term loan is now reduced, term loan is waived in the resolution plan, and it is waived to the extent of say 90 crore, and only 10 crore is payable. So then one opinion is being given that this 90 crore would be taxed in the hands of the company. So this is still has to see the test of various courts. I personally feel that the amendment in Union Budget 2023 that was not for this. The target was not to make term loans and kind of capital account liabilities as taxable when it ceased to exist. So the judicial pronouncements in this case is a Logitronic Private Limited versus Commissioner of Income Tax. That's a High Court of Delhi, and it has been held that any amount which has been claimed as deduction by the assessee, the right back would not be taxable. So anything which is not claimed, anything which has not been claimed as a deduction in the past, in case right back is coming, in case the liability ceased to exist, it is not taxable. Loss, expenditure, or trading liability incurred by the assessee and later written off would become income. Liability incurred for any other purpose later written off would not be an income of the assessee or successor in business. Liability incurred for acquisition of capital asset and later waived and the write-off does not qualify for tax under Section 41 or even under Section 28, subsection 4. The Supreme Court has actually decided in a case which is the Commissioner versus Mahindra & Mahindra Limited, again similar things, that anything loss of stock can be claimed as business loss. Brought forward business loss can be set off against the business profit, and MAT is also not applicable up to the amount of brought forward losses. However, the future depreciation would be reduced, but this is also like in the case of CIT versus Ramaniam Homes Private Limited, Madras High Court has said that if the waiver also includes some outstanding interest on term loans, which was allowed earlier in the earlier years as a deduction, In case that particular interest is written off or waived, then it becomes taxable. However, the Madras High Court has very clearly said that the MAT provisions, minimum alternate tax provisions, whether that will be applicable or not, that depends on the exact accounting for the write back. In case the accounting is done and that particular amount is brought to tax through the profit and loss account, then MAT is applicable. But in case that particular waiver based on the accounting principles is taken to capital reserve, then that may not attract minimum alternate tax also. Now, GST dues we have discussed, like these are the GST dues, liability of his directors, that we have already discussed. So we have seen the so this is a case which is a recent case. This is important, but then before that, I would like to take a few questions. The last question. Ranjan Chakrabarti, is secured financial creditor and secured operational creditors stand in the same footing in Section 53? Yes. In Section 53, the Section 53, subsection 1A, it only talks about secured creditor. It is not using the word financial creditor or operational creditor. So if anyone is secured, will fall in that first line, because the word used is very clearly secured creditor and not secured financial creditor or secured operational creditor. So for any person who is a secured creditor, maybe operational or financial, will appear as a secured creditor in the first line. Now, Manvi Jain says, though no demand can be raised post conclusion of assessment proceedings, but can Income Tax Department set off pre-CIRP dues against carry forward losses during CIRP period? Yes, the no demand can be raised post conclusion of assessment proceedings, but can Income Tax Department set off pre-CIRP dues against carry forward losses during CIRP period? My understanding is yes. That is the reason that I am saying that the RPs are supposed to attend to the income tax cases. Otherwise, unnecessary demands would be raised, and against those demands, but see, like as far as these past losses are concerned, against past losses cannot be automatically set off. Losses of my past years are my assets. And in case there are income, in case there is income which has been assessed for a particular year, current year, and against that income, it is not really possible that my past losses can automatically be adjusted. So as the time goes, we need to close it, because in this case, Assam company, we are very clear that in the case of Assam company, again, based on State Tax Officer versus Rainbow, the resolution plan, which was approved in 2018, based on the appeal by the Income Tax Department, this resolution plan was considered as it was sent back to the Committee of Creditor to provide for the tax dues. So in that particular resolution plan, the tax dues were not paid. But then in this case, NCLAT held that the judgment passed by the Supreme Court, the dues of the appellate are government dues and they are secured creditors. So therefore, the decision of the Honorable will give a new challenge to code. So it was said that the set aside, like the in 21, where the adjudicating authority passed the order approving the resolution plan that was set aside, and the matter was remitted back to the adjudicating authority with a request to hear the parties considering aforesaid facts. So a resolution plan was approved in 21, and the income tax department went for an appeal, and then the resolution plan approval order was set aside, and the adjudicating authority was directed that the claim of the income tax department should be considered and the necessary orders may be passed. So friends, we need to close it, and as the time is very important, so thank you very much, and it is really a pleasure. So this time the many judgments that we have seen, but the tax issue has become a complicated issue. I would only conclude that this tax issue is presently applicable to state tax dues. It is not applicable to central sale tax dues. It is also not applicable to the custom duty. It is also not applicable to the GST. It is presently applicable to state tax and to the income tax dues. We have not yet studied the service tax dues. We have not yet studied even the excise dues. We'll study and we'll come back to you. Thank you very much. It is concluded, and as we say that we again will meet all of you on next Saturday at 11 a.m. Thank you. Thank you very much.